Hey everyone, this is Alan from EV News, and this is part 3 of my 3-part series about my top stock picks for 2021. And today what we're going to go over are the high risk, high rewards. If you haven't checked out the other two, I highly recommend doing that as well. The first one is about safe investments. The second one are about the growth stocks. And then part 3 is the high risk, high reward. So before I get into it, I'd like to ask you guys to like and subscribe, and let's get into this video. So the first company in my high risk, high reward stocks is NIO. Now NIO just had their NIO day, and congratulations to them. They announced a new sedan, the ET7. It looks beautiful. It is a luxury sedan. Up to date, everything else that they have manufactured has been the SUV, so the EC6, the ES6, and the ES8. NIO has a great outlook on the future. This sedan will be ready in 2022. They're also manufacturing a 150 kilowatt hour battery, solid state battery, that is supposed to extend the range. I think I read something like 900 kilometers or 1,000 kilometers. So it's going to be fantastic. The tech that they're doing, the battery as a service program, is phenomenal. NIO has a great outlook. They're also moving into Europe for their first international sales. So the things look great with NIO. I am bullish on NIO, and I know a lot of people who are as well, but they come with a risk. And the risk with NIO and another company like XPEV or XPENG, which I really like as well. They have great autonomous driving technology. They moved into Norway already, and they're making sales there. So they're also pushing international sales. And things like Li Auto and Candy, which I don't want to get into today because I'm not very familiar with them, or I'm not really interested. The Candy, I'm not a big fan of Candy at all. I really like NIO and XPEV when it comes to the Chinese EV stocks. And the reasons why are what I mentioned before, but the risk is that they're Chinese stocks, and you have to be careful because there's been a lot of rumor about Chinese stocks being delisted, and it is a big concern. In fact, I read on Reddit that people warn, everyone's bullish on NIO on Wall Street Bets and on other Reddit or subreddits. However, a lot of people do warn, you got to be careful because they are Chinese stock and they could be delisted, and that's the reason why there's risk. So if NIO and XPEV were to make big jumps ahead, I would kind of recommend start pulling a little bit of profits, just in case there's an offering, or in case they get audited, or in case, they get delisted. Just be cautious with these. Another stock that I want to talk about, another company that I do really like, and in fact, I have family members who are invested in it, and that is in Workhorse. They do the last mile delivery trucks, and I do really like them. They have a lot of great news. They have a really great, these C1000 and the C650 trucks. Very nice. I've written multiple articles about them before and why this is a stock that you have to buy. And of course, they have great news. Workhorse received a purchase order for 6,320 C-Series all-electric delivery vehicles from Pride Group Enterprises. So they have a lot of great things, and this is just recent as of January 4th. So we're talking 6 days ago. So lots of great news there. But I feel like a lot of this stock is contingent on their contract with UPS or USPS. No, UPS, I'm sorry. It's contingent on that. So if the news was to drop that they didn't get the contract, or that USPS was going to look somewhere else in order to fulfill those last mile delivery vehicles, then I feel like this stock has that risk that it could drop quite a bit, because most people are still holding and waiting for the day that the news is released. So you just got to be careful. I think it's bullish. I think there's a lot of great rewards with Workhorse, but there's that risk in case they don't get the contract, right? That government contract. So another company that I like a lot and that I am kind of bullish on, and it is an EV company, basically, is Ideanomics or IDEX. And what they do is they focus on, of course, electric mobility. So there's things like electric tractors. I think they have this partnership with Solic Track. And then also they're doing a lot of fintech as well. So they have a lot of they diversify very well into the market. But one of the big signs for me that shows that this is a company that has a lot of reward is that they just signed a definitive agreement to acquire Utah-based wireless charging provider Wave. And what Wave does is they have literally wireless charging. So as the bus or as a vehicle runs or drives over these chargers, it's able to connect wirelessly and charge, just like we have the technology to do that with our phones and everything else. So I really like them. The risk with this company is that they are a little bit unpredictable. They're very volatile. The stock moves up pretty fast and then dips really fast. And it does seem to have a trend where it is moving up. I remember it was sitting at below $1. and now it's sitting over $3.20. I do like it. I have quite a bit of friends and subscribers and people who ask me a lot of questions if they should invest, and they have been holding since like in the mid $1 range, and they've already doubled their money. So yeah, keep an eye on Ideanomics, but you've got to have the stomach for stocks like this. They are cheaper, like penny stocks almost, and you just have to be careful. Okay, so another company that I really like and I feel like it has a lot of reward moving forward is AREC, or American Resources Corporation. And I'm a big fan of AREC. I hold it in my portfolio. I have not that many shares. I have a smaller position, but I got in quite early. So I'm holding them as well. And the reason why is because they have this rare earth subsidiary out in Eastern Kentucky. And of course, rare earths, as I've mentioned in other videos, for example, like Mountain Pass. Mountain Pass is one of the stocks that I believe is going to grow quite a bit in 2021, and I have a really nice position there as well. But I truly believe that AREC is going to experience quite a bit of growth because of this American rare earth subsidiary that they have. They have coal and other mining projects that I'm not interested in and I don't look at. That's where my focus is on, is the rare earth subsidiary that they have. Another high reward, high risk company that I like is called American Battery Technology Company. And what they are is a recycling company, and they're going to be recycling the lithium ion batteries. They're located like 30 minutes from the Tesla Gigafactory in Nevada. And I've written an article about the 3 OTC stocks that I like the best, and this is one of them that it was on there. But of course, it's an OTC stock, so you have to be careful. There's a lot of risk with OTC stocks. They're usually like in like preliminary phases, and a lot of them don't ever make it. So they're very subjected to like bankruptcy or completely going out of business. So just got to be careful. I do believe there's a lot of reward here with SABML. At one point I saw it sitting at like $1.50. I got in at 9 cents was the first time I bought shares, and the last time I bought shares was at 10 cents. So my average is like 9.5 cents. So I've got in extremely early, but I still see a lot of reward. I've sold like 1,000 out of the like 7,000 or 8,000 shares that I have of ABML. So I just pulled a little bit of those profits, and then I diversified it into other companies. But I do really like them, but the risk is that they're OTC stocks. Another company that's kind of similar is this Aqua Metals. And Aqua Metals is the same thing. They do recycling for lithium, or the lead batteries. And I've heard that they're moving into lithium battery recycling as well. And if you think about it, as we're moving towards this EV revolution where all cars are moving towards EV, companies are moving towards EV, well, who's going to take care of the lead, right? All those lead batteries that are in cars, well, they are a huge liability, and they are a huge polluter of the planet. So having a company like Aqua Metals to actually recycle those lead-based batteries could actually see quite a bit of growth. Of course, the risk is that it's kind of an industry that's unfamiliar or unknown of, but I do kind of like it. There's that risk because it's just such like an unknown company, right? So another stock that I'm very bullish on, and I've made a whole video about it, is about DSGT. And the reason why is because they have this ET5, they have the eTerra, and they have these scooters. So they are like a middleman. They own the distribution rights for Chinese EV companies, and they just came here to the States. Check out the video. You'll see why. Once again, the risk is that it's an OTC stock. And then that's the list of all the companies that I feel in this year of 2021 are high risk, high reward. In most cases, I feel like most of them are higher reward than they are risk. You just have to be cautious as they take off. You need to slowly start you need to start collecting some of those profits just in case there's an offering, or in case these OTC stocks don't pan out the way they hope to. So these are the companies that I like. If you have any more questions or looking for more information, go to my website. It's ev-news.com. I'm dedicated to the electric vehicle industry, and I'm invested in financial success. So there's the new E7 sedan. It looks very, very nice. And there's a lot of articles here on like companies to invest in. So you guys, don't forget to like and subscribe. I'll see you guys in the next video. See ya.